Thank you for tuning in to another edition of Pre-Market PulseScan with yours truly, the Vulcan, aka the Algo Capitalist. Today is Friday, December the 9th, 2016. The time of this recording is at 7:36 a.m. Eastern Standard Time. Looking at overnight market activity, the Dow hit a high of 19,597 and a low of 19,556. The NASDAQ 100 hit 4869 and a half and a low of 4851.75. The S&P 500 hit a high of 2243 and 3/4 and a low of 2239 and 3/4. The Russell hit a high of 1388.70 and a low of 1382.60, and the Nikkei hit a high of 19,180 and a low of 18,825. Notice the very tight trading ranges in the overnight markets and the stock index futures. Crude oil rallied to $51.50 and crashed and burned to a whopping $50.85. Once again, very tight trading ranges here. Not even a full buck in trading range for crude oil. US dollar hit 101.59 and a half and a low of 101.04. Last trade is 101.55, so it's trading near the highs of the session. Gold hit a high of 1173.80 and a low of 1164.50. Last trade 1165.70. Down $6.60. Silver hit a high of $17.18 and a low of $16.93. Last trade 16.98.5, down about 11 cents. Excuse me. So, for the most part, overnight trade has been somewhat muted. But the interesting one here, obviously, is the gold and the silver. As you can see, gold is under a lot of pressure still as central banks have their foot on the neck of the gold market for now. So where does this leave us? Well, today is Friday. Today is Take Back Friday, which means that we do not expect a lot of volatility or a lot of price action per se. Normally on Fridays it's muted. Take Back Friday originates from the fact that people like to take profits off of the table ahead of the weekend so they can go party, gamble, whatever they do. And that's why if the market's been up really nice all week, you'll see it pull back and people are taking money off the table. Sometimes it can pull back even significantly, and just depends on how greedy people are or how desperate they are for money and how many people liquidate. And then if that liquidation turns into a situation where you see blood in the water, and then the bear sharks come in and start piling on and start shorting that, and then it cascades and turns from a pullback to a full-blown bearish scenario. So that's where we get that term Take Back Friday. Likewise, if the market's been bearish all week, you'll see a bear market rally as people liquidate short positions, and if it gets too severe and the bull sharks, see the blood in the water, they pile on, cascading it from a bear market rally to a full-blown rally that reverses, and then that's how you see those bearish engulfing candles or bullish engulfing candles. That's how that originates. That's how that scenario plays out. You do not know which one it will be until it starts to happen. So basically, now turning to the pre-market pulse waves, and let's take a look at what we can expect out of the market today. Today's rally alerts, excuse me, are for the inverse side of things. And so we're looking at a possibility of a rally in the inverse ETFs for gold. and for silver, specifically DGLD and DSLV. We also have a rally alert for the bear ETF for the 20-year Treasury. We also have rally alert for the natural gas ETF, Gas X, the biotech bull LABU. We have a rally alert for JDST, for dust, for the crude oil futures, for UVXY, calling for a possible pullback in the market, and also ZSL, which is the ultra short silver, and the UWTI, which is the 3X long crude oil. So those are the rally alerts to pay attention to today. I know we don't like hearing about bearishness when it comes to gold and silver, but just keep in mind we're talking about the paper markets, which can give you ulcers if you don't know how to think about the markets correctly. So we're never on this broadcast talking about physical gold and silver. We're talking about the paper markets. At no point will I tell you to liquidate physical holdings. You already know you do not liquidate your physical holdings unless for life emergencies where you need to raise cash. But you do not liquidate physical holdings. All right? You sleep with them under your pillow, grasping them with your hands. That is how you store your physicals. Hopefully you can read between the lines of the silliness. All right, let's look at our 411 alerts, and you know what 411 alerts are. Looking at our oversold bounce type scenarios. TBT, the inverse ETF for the 20-year Treasury, which is the sister to the TLT. Also, USDU, which is the US dollar bull ETF. Those were looking for upward bounces today. As far as swing trade alerts, we have many. So let me just cherry pick a few. Give me just a second here. Okay. All right. Going down, up and down the list. Let's see here. Okay, we have the S&P looking at the SPY. We have looking for a long play in GLD. All these are long plays, by the way. The NASDAQ 100, the Nikkei, the QQQ, all of them. The TQQQ, TLT. So pretty much basically buy everything today. That's what it's basically saying. It's a possibility that the market could go out with a bang this week with a rally. The Dow Jones has it. They all have it. Pretty much everything on the sheet is a buy. And looks good. Just remember when you're looking at your pulse waves, you got to be careful because I noticed that sometimes there can be confusion, especially when the markets are at crossroads. Case in point, as a matter of fact, I'm going to upload to the trading room one of your members, subscribers in the trading room, took it upon themselves to redesign the alerts section. So I'm going to upload that. So make sure that you download that because that's going to really guide you when it comes to looking at the sheet. And I think you're going to find it very helpful, especially when some of these markets are on crossroads. I know it can be confusing when, like, for instance, I'll just take one off the sheet. Look at Amazon. Okay. Amazon has a swing trade alert. So it's a buy signal there under the positive momentum column. But if you look at your trends, and that's what you need to learn how to read is your trends. The uptrend has an 18, the downtrend has a 52, which means you're in an overall bear market, but it's under retracement. All right, so the bear market is in retracement right now off of its lows. However, you have a 911 alert, a crash alert under the negative momentum column. So although the market has been retracing off of its prior lows, it's warning you that it may be coming to an end, so that crash alert you have to pay attention to. So in this scenario, you would do well to obey the stop loss on the long trade, and even possibly look to get short if the sell short swing trade is triggered. All right, you'll notice that there is a difference in these prices. Notice the prices. Notice the entry point for the sell short. This is not a stop and reverse trade. This is a get out of longs at a certain point, and then wait and see if the market's going to break supports and then trigger the pulse wave short. All right, so take a look. That's what you study. That's what you look at. It's not saying don't take the long trade. As far as we know, the long trade could trigger today and Amazon could rally 10, 20 bucks. Okay? This is not telling you that that won't happen. This is just letting you know what to look for today if you're going to operate in this particular security. That's the power of the price triggers. The price triggers themselves, as you know, are extraordinarily powerful. There are many times where those entry points to go long will coordinate with the lows of the day, and the entry points to go short will coordinate with the high of the day. It's just how it is. And the pulse waves are not necessarily predictive. They just let you know where the price action is. And it does it 24 hours in advance. That's how the system is designed. Sometimes it leads the market 3 to 5 days out. So you may be sitting here waiting to be triggered in a particular trade and be waiting all week, and then when Friday rolls around or Thursday rolls around, boom, you finally get triggered. And then you get to ride the wave into the following week, or as long as the trade lasts. That's the power of the pulse waves. Let's see another one to look at here. Oh, this reminds me. I need to look at my schedule for the coming week. I want to think about doing another webinar. So I'll think about it over the weekend, and then I'll let you know, and I'll post it so that we can do another webinar. I want to show you some historical aspects of the system, because I know some of you had asked and was like, you know, because I know you take each daily pulse wave that comes out, and then you set it aside and you kind of like study a particular security to build like a track record to see how it's acting. Well, we're going to actually do a couple of those in the next webinar, time permitting. I want to do take another run at the stop loss thing for you guys. So I think we're going to do that again. The first webinar was successful, but it was just a test run. The next one, we're going to really go hard and look into this. And just remind me, I do want to do some analysis and show you guys what's what. And we'll take a few securities and do that and let you see how the system's performing and give you a better feel of what's what. So just remind me if I forget. But that's kind of where my thinking is on this. Particularly if you look at like the Australian dollar, okay, and how that's been operating this week. So let's see, this is Friday, Thursday. Okay, yeah, if you go back to like the December the 5th and you notice, first of all, we've been in a locked in downtrend in the Australian dollar, right? Looking at the Forex pair here. And you've had some buy signals, particularly around the 75.03 level. The market finally did trigger and get up to 75.07 before pulling back somewhat. But it's still in an overall bullish tone, and that's the part I wanted you all to look at. It is not pulse waving negative, it's pulse waving positive. It's trying to turn around. If you look at today's sheet, it is actually in a bearish retracement. This is the first day. This is day one of the bearish retracement. You have an 18 in the uptrend column and a 52 in the downtrend column. That is a retracement, a bearish retracement. We're retracing off of a bearish position, a bear market, and it could go full blown. So if you got triggered in this trade and you are long, you need to stay with it. You need to keep that stop in place. All right? You got to do it. You gotta do it. All right? This one is looking really good. The last time we saw this beginning of this trade was on November the 15th of this year, and it was the opposite. We started, that was bar one of a bullish retracement off of a bull market, and then it retraced, and then it became a full blown bear market by November the 17th, and from there the market proceeded to pull back. And the funny thing is, it only pulled back to a certain point. Then you got a rally alert, and then let's see, the rally alert took place on November the 26th. I'm sorry, the 21st, November 21st. And then the rally actually came to fruition. It didn't break out until now. So it was way early. And then after that, after the rally alert, a few days later, you start getting these swing trade alerts letting you know something is happening in this market. And then several days later, you got another alert. So it's like the market's been trying to tell you something for a minute. It's been saying, look, there's things happening in this market that you need to take note of, and then boom, here we are. So I just wanted to point that out, that when you get these rally alerts like this, you have to take them seriously. Even if it doesn't play out right away, you're still being alerted to something. Something saying, look, you need to pay attention to me because there's something going down, and I want you to be aware of it. That's the power of these alerts. They're there for a reason, to let you know that there's something changing in the overall dynamic of a particular market, and you need to pay attention to it. Let your orders work. Do what you do. Trade it the way you trade it, but just be on the lookout for reversals, because the likelihood of the reversals is high, and that's what it's attempting to say to you. It's attempting to say to you, I may turn. Pay attention to me. Do not ignore me. Boom. That's what it is in a nutshell. All right. So with that said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. See you in the trading room. Last trade 16.98 and a half, down about 11 cents. Excuse me. So for the most part, overnight trade has been somewhat muted. But the interesting one here, obviously, is the gold and the silver. As you can see, gold is under a lot of pressure still, as central banks have their foot on the neck of the gold market for now. Thank you for tuning in to another edition of Pre-Market PulseScan with yours truly, the Vulcan, aka the Algo Capitalist. Today is Friday, December the 9th, 2016. The time of this recording is at 7:36 a.m. Eastern Standard Time. Looking at overnight market activity, the Dow hit a high of 19,000 and the Nikkei hit a high of 19,180 and a low of 18,825. Notice the very tight trading ranges in the overnight markets and the stock index futures. Crude oil rallied to $51.50 and crashed and burned to a whopping $50.85. Once again, very tight trading ranges here. Not even a full buck in trading range for crude oil. US dollar hit 101.59 and a half and a low of 101.04. Last trade is 101.55, so it's trading near the highs of the session. Gold hit a high of 1173.80 and a low of 1164.50. Last trade 1165.70. Down $6.60. Silver hit a high of $17.18.5 and a low of $16.93, 597, and a low of 19,556. The Nasdaq 100 hit 4869.5 and a low of 4851.75. The S&P 500 hit a high of 2243 and 3/4 and a low of 2239 and 3/4. The Russell hit a high of 1388.70 and a low of 1382.60.